let's just take the average PE of the S&P of every stock, and it was around 17.6 times in 2019. Now we've had 6 what I call extinction-like events, COVID, the bullwhip supply chain effect, inflation surge, Fed fastest hikes, Trump tariffs, and then, of course, U.S. bombing Iran.
6 of them, yeah, okay.
Yeah, all of them should have wiped out earnings, but the S&P earnings have grown, and yet the equal weight PE is now 16 times. So the market's gotten cheaper in the last 6 years. I think the 200 to 250,000 for Bitcoin still makes sense because that would still only value it at 25% of the size of the gold market.
Okay.
So I think digital gold means Bitcoin should be worth over $1 million per Bitcoin, and it could happen in the next few years. But maybe pricing 25% of that, especially with Genius Act, makes sense.
Over the past few years, markets have endured wave after wave of disruption, from inflation spikes and aggressive Fed rate hikes to supply chain breakdowns, trade wars, and geopolitical tensions. You'd expect corporate earnings to suffer under that pressure, but the S&P 500 has proven remarkably resilient, continuing to grow. Yet despite stronger earnings, valuations have actually declined. The average price-to-earnings ratio across S&P stocks is lower than it was in 2019. In other words, companies are making more money, but their stock prices haven't caught up, a sign that we may be looking at undervalued opportunities hiding in plain sight. Meanwhile, Bitcoin continues to solidify its role as digital gold, and according to Tom Lee, it's still significantly undervalued. He argues that if Bitcoin reached just 25% of gold's market cap, its price would land between $200,000 and $250,000 per coin, a level he believes is still very much within reach. And that's not the ceiling. Lee sees long-term potential for Bitcoin to surpass $1 million, especially if favorable legislation like the Genius Act paves the way for greater institutional participation. So while the headlines may be filled with macroeconomic panic, the deeper signals suggest a different reality. Equity markets are quietly offering bargains, and Bitcoin could still be in the early stages of its growth story. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
I think many people, when April happened and we had Tariff Armageddon and the market went into a free fall, investors liquidated because they thought we were entering a recession. But, and as you guys had covered, like the market then staged a V-shaped recovery, which caught many people off guard because they wanted to have a chance to get in. They wanted the stock market to be like a K-shaped or flat line. Instead, it was a V-shaped bounce. And so most investors are underexposed at the moment, and they're trying to look at headlines with a half-empty view. But as you guys know, earnings have actually been really resilient, and I think it tells a very good story.
Yeah.
What we're saying is, instead of someone saying, oh, the MAG is making the market expensive, let's just take the average PE of the S&P of every stock, and it was around 17.6 times in 2019. Now we've had 6 what I call extinction-like events, COVID, the bullwhip supply chain effect, inflation surge, Fed fastest hikes, Trump tariffs, and then, of course, U.S. bombing Iran.
6 of them, yeah, okay.
Yeah, all of them should have wiped out earnings, but the S&P earnings have grown, and yet the equal weight PE is now 16 times. So the market's gotten cheaper in the last 6 years, despite proving they can grow earnings through 6 extinction-level events.
Do you think the Mag 7 stays together, or do we need a new terminology, a new grouping for leadership in the markets?
Yeah. I mean, to me, the Mag 7 have become household names. Apple is Apple, and Google is Google, and we know the product and we know the stock. And I think they have really established themselves as consumer and business companies. And I like for me, Apple has been sort of quietly ready to pounce on AI, but I don't think they need to pay up for any of these models. So I think Apple is going to surprise people. I mean, they didn't launch an iPhone until 2007, and mobile phones had been around for 15 years. But when they did enter that market, they completely transformed the marketplace. So to me, I think when they want to play big in AI, and when they do in that moment, I think they will change the game. I think the 200 to 250,000 for Bitcoin still makes sense because that would still only value it at 25% of the size of the gold market.
Okay.
So I think digital gold means Bitcoin should be worth over $1 million per Bitcoin, and it could happen in the next few years. But maybe pricing 25% of that, especially with Genius Act, makes sense.
Are you going to, I don't know, start making comments and recommendations about stablecoins?
Yes. I mean, in a sense, stablecoins are the ChatGPT moment for crypto because businesses like it and consumers are adopting it. And now we see JP Morgan and Citi and getting into the stablecoin market, and the Genius Act, of course.
How would you play that?
Well, Circle is one way because it is, a standout company. They've done really well. But Ethereum is really the way to play stablecoins because the majority of stablecoins are created on Ethereum. It's over 30% of its network fees. And if Scott Bessent's right in it, he says now it's close to a $4 trillion market. That's exponential growth for Ethereum.
Ether has taken off recently. It was down at 1,700 or something like a month ago or 2 months
yes.
ago. Now it's back almost, 36 or something?
That's right. And I know Mark Newton, our head of technicals, thinks it's 5,000 is doable near term, but if you value it similar to Circle, it's more between 10 and 20,000.
When markets plunged during the tariff panic, many investors braced for a drawn-out recession and scrambled for the exit. But instead of the slow, painful grind they expected, stocks staged a sharp V-shaped recovery, catching underexposed investors off guard. Since then, headlines have remained gloomy, yet corporate earnings have continued to show resilience. Despite enduring 6 major economic shocks in recent years, from the COVID crisis to aggressive interest rate hikes, profits have climbed while valuations have actually declined. That's not what you'd expect in an overheated market. In the tech space, the rise of AI is reshaping the landscape, creating both winners and losers. While some tech giants stall, others are quietly preparing for their next leap forward. The same can be said for crypto. Bitcoin still appears to have significant upside, with price targets north of $200,000 seeming reasonable when compared to gold. Meanwhile, if stablecoins represent crypto's ChatGPT moment, Ethereum might be its most powerful engine, driving innovation and utility across the decentralized ecosystem. While Tom Lee focuses on Bitcoin's market potential and upside, Jeff Park adds a deeper layer to the discussion, exploring what gives assets like gold and Bitcoin real staying power. From custody risks to user experience, he looks at the human element of asset ownership in a rapidly evolving financial world. Let's dive into some clips from his interview.
Yeah, I think gold is inherently valuable because it has a long track record of being perceived valuable by a global population. This goes back to your original question as to who finds and determines value. And gold, without a doubt, has the longest proven track record. When I got married, I was gifted gold. When I had children, my family gifted me gold. And all of these constructs come from the notion that these are hard assets that allow you to opt out of having fiat economy, and especially if you think that these things can be transportable, then it's actually even more interesting to think about the kinds of flight risks in the most tail edge of events where people are trying to participate a protection for. So I think in that sense, the psyche of gold is real. The geopolitical contribution is also real because after Bretton Woods ended in 1971, it hasn't been that long for a whole generation to still not remember the role of gold. So there are people out there who still remember the essence of how you used to have capital that was backed by assets that wasn't totally dependent on just the trust creditworthiness of the country. And so that trend is important because if you think about revisiting a world where we return back to like a price specie mechanism, like a gold standard, then gold will come back. And actually, a lot of the government institutions are buying gold and the central banks are participating because they're looking at gold as the hedge for the day in which that will contribute to collateralizing a new world order. So to me, this makes a lot of sense. So I think it's easy to dismiss volatility as a feature that is a net negative, but actually what I would argue is young people actually embrace volatility. Some of that I think is a generational trend where they realize that the opportunity cost is way too high to not experience volatility to achieve some level of wealth creation. But the reality is volatility, again, is a path-dependent outcome where the only thing investors really care about is the terminal value. So if you really believe Bitcoin is going to be valuable over a long period of time, people can weather the volatility. The thing that I worry a little bit more as to where Bitcoin falls a little short versus something like gold is that most humans are not very good at being owners of their own assets, self-custodial ownership, right? And it's actually perfectly human to want to outsource that to somebody else and say, you manage the custody of my assets because I'm afraid of those risks. And Bitcoin turns that model completely upside down, right? Because to truly own Bitcoin, you must do it in a self-custodial way where you're willing to entertain the possibility that you'll lose it all if you mess up. And most humans cannot tolerate that risk. Gold has elements of this, but the ability to lose all your gold is not nearly as drastic in the ways that people might just forget their keys or actually have their keys stolen, because gold is still a material physicality in that it exists in the universe. And so when people compare gold and Bitcoin, I actually don't worry about the volatility. I don't worry about like the price. It's the self-custodial aspect that I think many people will still struggle with, where they're comforted by knowing they have a physical object that they can hold, smell, and taste, and know that it is here. And Bitcoin feels at some level a little bit abstract, which is why some people still till this day don't really believe it's materially valuable. Yeah, I think this is the innovation that we are embarking upon, which is how are we going to integrate Bitcoin to a business model where we can remove some of those tail risks of loss and insurance, but also not totally lose the element of those being your sovereign assets. Because the moment these assets like Bitcoin become contributed into a custody model where you are no longer the owner, we're kind of revisiting the traditional financial system as we have it. And that means that the exchange or the bank can re-lend it and rehypothecate it, and it begins to kind of look a lot like what we thought we were solving for. So I think what we're really trying to figure out is, can we build a nicer user experience that allows people to feel comfort and safety in owning Bitcoin, where you get that white glove experience, but you are still the person that own these assets in your name. And I think that is the great chapter that can be unlocked with the growth that we see in the industry. You know, I think the fact that the ETFs have been very popular in its growth trajectory shows you that there is a version of owning price exposure without worrying about that custody risk that is valuable to investors. So I think in some sense, they can coexist. People still want financialized version of Bitcoin because that means it plays nicely in their portfolio management systems. They know how to margin it. They can borrow against it. The borrow market lets you lend your Bitcoin ETF out without counterparty risks. Whereas if you lend out your Bitcoin, now there's real counterparty risk. And so there's certain features of the financial system for which it can be very good. So I think there will always be value for needing a wrapper that plays into the traditional compliance system. But it also doesn't mean it's mutually exclusive that investors should not also want to own some Bitcoin in cold custody as well. And I think everyone should actually do both, because then you get to really see why the experience has different challenges but privileges that are associated with it as well. I consider time to be one of the component of energy that can be created that can in turn turn to value. So in many ways, I think Bitcoin represented a concept of this through proof of work, where enabled to actually mine a Bitcoin, you actually have to expend a lot of energy and time to get the block subsidy, which in turn is a battery almost that has captured the effort and has given you a reward for it. That's why the scarcity exists, because time is scarce and energy is scarce. I think there's many other ways to apply this, which is there are human capital in itself that is scarce, and actually the use of that human capital can be valuable. So the number one example I point to people is professional gambling. So when people think about gambling, I'm not talking about slot machines, right? Where like we're just playing games that have negative EVs. I'm talking about professional gambling where Real skills can add positive EV outcomes. So poker is a great example. If you're a great poker player, you can generally have a positive EV outcome. And that is because your time is valuable because you're spending it to it. And the energy you have to expend to win is not insignificant either. But that income stream looks totally unrelated to the stock market. It looks totally unrelated to the interest rate policy. It is just an ability to earn income that is based on your human capital. Another good example is sports betting. Sports betting is widely known as one of the most complex markets, generally because the information edge does favor smart bettors. So there are professional sports bettors who are actually able to be better than the bookies, in which the bookies rely on the best bettors to create the inside market. So if you're a professional sports bettor, that's another outcome of an income stream that comes from expending energy. And that kind of ability to earn income, I think, should be a component of how to imagine income creation in your portfolio. It goes back to the comment you shared earlier, in which the risk of Bitcoin seems to be that it is highly correlated to risk on assets. And I think what we are now seeing is that those moments are also fleeting. And we are starting to see divergences of Bitcoin's price action relative to equities in ways that people are giving it more optionality that it could outperform in a risk on and risk off environment. So I call this phenomenon a positive row Bitcoin or a negative row Bitcoin. Row is a Greek in options terminology that implies a change in value based on the change in interest rate. And generally, if you thought interest rates were going to go up, that's a pretty challenging market environment. It's a market environment where people are worried. And in those situations that are risk off, you could imagine Bitcoin becomes a store of value. But historically, what happened was reverse, which is that Bitcoin is a risk on asset, right? Where rates go down, Bitcoin's the fastest horse because it fights inflation the fastest. And the key is there a moment when Bitcoin can be both? And I think what you're seeing is through the volatile path, if you zoom out and look at the long history of Bitcoin's price action, it is actually both positive row and negative row, depending on the market environment. And I think that's why Bitcoin's valuable. And people are realizing there's now over 10 years of track record of having demonstrated this. And so the Bitcoin ETF lets you access it in ways that people can build their portfolios thoughtfully. And financial advisors are finally understanding this use case where it is no longer a scandalous conversation to potentially suggest this being important, especially after US credit ratings was downgraded most recently. And this issues with fiscal expenditures is becoming an everyday topic of conversation. I think that the ETF market is going to be relatively large at a global scale. And we have to remember, we still don't have ETFs in many markets yet. For example, Korea does not have a Bitcoin ETF yet. And so those wrappers are still growing at a global scale, and they are going to become important because, like I said, many humans do not want to actually deal with the self-custodial risk of Bitcoin. And I think that is a feature you have to acknowledge that people find valuable. And so that will be complementary to those who actually still want to own Bitcoin directly because they find that to be culturally aligned with the mission. But I think what you'll see is most people are economic investors and they want to earn the best profit opportunities. And having it in the ETF wrapper just lets you do more things from a financialization perspective.
Bitcoin is stepping into a new era, one where owning it doesn't have to mean choosing between total control and total chaos. While self-custody offers empowerment, it's also intimidating for the average user. Lose your private keys and you lose everything, not exactly beginner-friendly. On the flip side, handing over control to banks or exchanges feels like a return to the very system Bitcoin was meant to disrupt. That's where innovation is focusing now, building a middle ground that offers ease of use without compromising ownership. ETFs are a major step in that direction. They provide access, simplicity, and integration with the traditional financial system. Investors can now trade, borrow, and manage Bitcoin like any other asset, without the stress of seed phrases or hardware wallet. This marks a key shift in Bitcoin's evolution. It's no longer just the rebel tech asset, it's maturing into a versatile store of value that can perform in both bull and bear markets. With global ETF adoption still in its early days and trillions of dollars in traditional capital waiting on the sidelines, the next wave of Bitcoin adoption won't resemble the last. It will be larger, smoother, and potentially more inclusive than ever before. So, as we wrap up, here's the question. Can Bitcoin truly be both digital gold and a high-growth asset? Or is that still too good to be true? Let us know what you think in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.